fixed wavelength, such as a
I'm sorry, I just recorded.
Okay, no problem. When people first start working with Hurst cycles, they think that the wavelengths are fixed, and that's surely a mistake, because nothing in the financial markets is fixed, is it? We don't find exact mathematics happening in the financial markets. But the cycles are not fixed. They are dynamic. They're constantly getting longer and shorter, and that's what makes it so challenging.
So they are changing, because here many traders are thinking it's fixed. It's a fixed number, a fixed date, a fixed hour, that it should be fixed number or fixed date.
That's right. No, according to the Hurst cycles approach, there are cycles approaches, other cycle approaches that work with fixed cycles. Hurst's approach has a thing called the principle of variation, which tells us that the cycle wavelengths and the amplitudes and all the other details of the cycles are constantly varying. So we can measure on this chart, for instance, I'm hoping you can still see the chart of the TASI. If we measure this cycle, which I've been telling you is 9 years long, you probably can't see that, but you can see it when you measure it, it's 7.6 years long. So it's not 9 years, okay? It's not a 9-year cycle. It's a 7.5-year cycle. But that's the principle of variation. Because the 9-year cycle could be anything from about 6 years to about 12 years, perhaps, but we call it the 9-year cycle simply because it averages out at about 9 years. If we had hundreds of years of data, then the average length of that cycle would average out to be 9 years. So this was a short cycle that played out from 2009 until 2016. If we measure the next 9-year cycle, you can see that was only 77 months, 78 months. And so it's in fact less than 7 years. But again, the principle of variation plays out. And what's more important than the exact cycle length is the fact that you can see the shorter cycles within that cycle, and you've got your M shape. When you've got your M shape, then you can say with confidence that we have our cycle trough. So that's how I got into looking at Hurst cycles. I found it worked for my trading personally. And then in 2005, I've been doing this for a couple of years, and I thought the analysis process is really complicated and it takes a really long time. So I thought, let me find a way of speeding this up. There must be some software around. So I searched. That was, early days really of trading software on the internet. I searched. I couldn't find any software for Hurst cycles. So I thought, well, I'll create some for myself, because I had some experience doing software coding. So I started creating this as a personal project for myself. And that was in 2005.
I heard it took you a lot to make this software, and you made our life easier making it.
Yes. Well, thank you. I'm very grateful about it, because it's now become, it's become what I do is, not just the software, also trading on the basis of these cycles. But so I created the software. So that's the background to the software. And so I've touched a little bit about Hurst cycles. One of the difficulties with Hurst cycles is that it seems very complicated when first you look at it, but it's really not. It's really simple, particularly if you know how to do the analysis, or if you have software doing the analysis for it. So let me speak about the TASI and show you how you can use Hurst cycles to.
I have a question, David.
Yes, go ahead.
Traders, they can use your software to see TASI.
Yes, absolutely.
This is the software. Okay.
Yes, sorry, I should have explained. This is the software that I created. It's called Sentient Trader, and I've loaded data off Yahoo Finance. It's very simple. I mean, I could have got data from many data sources, but this data is available on Yahoo Finance. So I loaded the data from Yahoo Finance. So let's speak about the TASI and what the cycle analysis is telling us. So this is a monthly chart. That's what this MN means. It's a monthly chart of the TASI.
2,500 looking forward for TASI.
Sorry?
2,500, they are looking for the insights about TASI.
Right. Okay. 2,500. Okay. Abdullah, I'm in awe of your
We are appreciative of you, David.
of your following. So let's speak about what the cycles are saying. What we have here is a cycle analysis. And you can see the cycles, the troughs of the cycles are marked with these diamonds. Analysis is very interesting to people like me. I'm an analysis nerd. I love analysis and I love talking about it, but it's not really very interesting to many people. So what you need to be able to do is move from analysis into trading decisions. So that's what we're going to do here. Here we're looking at a monthly chart going all the way back to 2002. This is 2002 over here. And right over here is today's date, of course. So moving from the analysis into making trading decisions, what we do is we first of all say, okay, so what's happening here? And so it's all very well looking at all that data, but we're not really very interested. All we're really interested in is what's happening now. So we zoom in and we can come back down to a weekly chart perhaps. And let's just hide some of these things so that it's not so
So you go from monthly to weekly.
Yes. So now we've gone from monthly to weekly. So these are weekly bars. And we can have a look at the shorter detail. So what's this analysis telling us? This analysis is telling us that a 54-month cycle trough, or probably as we saw a moment ago, a 9-year trough formed over here. I think that's the beginning of March 2023.
Yes.
Okay. Then this pile of diamonds over here tells us an 18-month cycle trough formed over here. And again, if we measure the number of days or bars that play out between there, you can see that that was 525 days. I don't know if you can see those numbers, 17.2 months. Now, this is an example of how Hurst cycles still apply to markets around the world, because the average length that Hurst discovered over 50 years ago for the 18-month cycle was 546 days. So this cycle trough, the 18-month cycle trough over here on the second week of August this year, was only 20 days early out of 18 months. So, and again, you can see here the M shape of your cycle. It goes up and it goes down, and then it comes down to here. And there's our 18-month cycle trough. Okay, so what's going to happen next? That's really the very important question. And to understand what's going to happen next, we can look at these semicircles. You can see this orange semicircle. That is for the 54-month cycle trough. So at this time over here, back in 2023, this orange cycle was causing price to move up. Okay, and so it influenced price to move up. Over this time, which is looking into the future in 2026, that orange cycle is going to be moving down. So what's it doing right now? As you can see right now, it's moving pretty much flat. So that means the 54-month cycle is flattening out. We don't need to worry too much about that. But we're going to look at the shorter cycles. What's happening to the 18-month cycle? The 18-month cycle is also moving up, and it's about to flatten out. Okay, so that's on our weekly chart. So we've got an 18-month cycle moving up and about to turn around and flatten out. When a cycle turns around and flattens out, we expect a peak. In other words, a high price. Okay, so then what we do is we move onto a daily chart. Let's switch to a daily time frame. And let's zoom in. We're not really interested in what happened before. And now we're going to change our semicircles. And we can see what these semicircles have to say. There we go. Okay, and we can just adjust that a little bit. Okay, so, and let me just hide the 18-month semicircle. So now that we've come down to this time frame, what is this telling us? It's telling us that an 18-month cycle trough occurred over here at the beginning of August of this year. Okay, then we have a 20-week cycle trough that occurred over here near the end of November last year. And here is your M shape for that 20-week cycle. All right. In the middle of that 20-week cycle was an 80-day cycle trough. Where's that M shape? There's that M shape. Can you see how we're seeing M shapes everywhere? Okay. Yes. So now we're not really interested in what happened last year. Last year is last year's news. So what we're going to do is now let's turn off these semicircles because they get very messy as we move forward. Let's zoom in and consider what's happening now. Okay, so now we're looking at the price action from the middle of November up until today. This is today, the 29th of January. I'm not sure if I downloaded this data before your markets closed. I think I did. A little earlier today, I updated it. This chart is not receiving live data, but we'll look on TradingView in a moment, which is receiving live data. Your markets obviously closed a few hours ago.
Yes.
But
5 hours.
5 hours ago. Okay, so I downloaded this data just to have a look early this morning, and so this isn't a complete bar. But what we do here is we look at the cycle analysis. We had a 20-week cycle trough at the end of November, and now we need to start thinking about what's going to happen next. Now, these diamonds mark cycle troughs that have been found in the past. So here on the 29th of December is a 40-day cycle trough. That's what this pile of diamonds means. That's a 40-day cycle trough. And if we measure the number of days that elapsed up to there, you can see that happened at 31 days. Again, it's the same cycle that Hurst discovered all those years ago. The average length of the cycle that he found was 34 days. So this cycle trough came in 3 days earlier than the average cycle length that Hurst discovered all those years ago in a market that Hurst never did any analysis of. So it's an amazingly worldwide approach. Really, these cycles they keep
between
beating.
28 days and 34, right? The 40-day, the cyclic model.
Yes, so the 40-day cycle you would expect to be anything from about 27 days up to about 40 something, perhaps about 48 days would be the right length of it. So here we are seeing these troughs that have been identified in the past. Notice how sometimes the cycle troughs get squashed by the longer cycles. So this 20-day cycle trough doesn't even exist. Okay, I mean you can't even see it on your chart. The other thing you'll notice is that weekends and trading gaps are plotted on these charts. It's quite an important thing is that Hurst claimed that these cycles work in calendar time, in other words, real time, not trading time. So it doesn't matter whether we're trading or whether we're not. We still need to be counting the time. Okay, and so the reason that the 20-day cycle trough cannot be identified is because at this period of time here, the 40-day cycle was very strong. We're not going to have time in today's conversation to talk about amplitude, which is the strength of the cycle, but it is an important thing to consider. So what's going to happen next? Well, that's when we turn our attention to these things. These things are called nests of lows. And what each one of these circles represents is the exact time at which the next trough of that cycle is expected. And the lines to each side represent the reasonable range of time. Now, because the troughs are synchronized, in other words, the troughs of the cycles happen at the same time, these nests of lows tend to build up like these triangles, okay, which stand at the foot of your chart. And you can see that the apex of the triangle is sitting on about tomorrow, actually, just roughly speaking. So what this is telling us is that the next trough of the 80-day cycle is color-coded. So the next trough of the 80-day cycle is expected soon. So what has been happening since the end of December, the 28th of December, is that we should have had an M-shape cycle play out. We've seen this happen so far, and then this, and now we are expecting price to come down into this trough. Okay, so how far down is it expected to come? Well, that's when we start using a cycle tool. So we can plot what's called an FLD, which is a very simple line. And let me just clear the marks off there. It's a very simple line that can be used to generate targets, and that can also provide us with trading signals, and will confirm what we're expecting. Sorry?
Supports and resistance.
Support and resistance, exactly. So, yes, you're probably seeing it. You're looking ahead. I know that you've been working with this for a while, so you know probably what I'm.
All of this, the traders, it will be done automatically for traders, right? The Nest flows, the FLD, so they don't have to calculate it.
Yes, absolutely. And in fact, I'll show you TradingView in just a minute. Okay. As soon as I've made this point, I'll show you the TradingView thing, and then we can talk about what the software does for you and what you need to do, because the software doesn't do everything. Yes. You need to do some things. So the idea behind this FLD is that at periods of time, the FLD provides support. You can see how price came down to the FLD, and it couldn't get below it. It provides periods of support. Other times, price crosses below the FLD. When it crosses below the FLD, it generates a target to the downside. When price doesn't reach a downside target, but turns up again and crosses up, that's an indication that the market is bullish. So that would have given us a very early good signal, somewhere about over here, that we had a bullish market for the rise out of the 34-day cycle trough. Okay, and here we've got price crossing above the FLD again, and it achieved its target. I'm just guessing where that target was. It was probably about here, because you calculate the target by measuring that distance and extending it, and so therefore you get that target over there.
If it's extended, it means strength, more strength to the cycle.
More strength. The fact that it extended further gives you more strength. And there are some traders who actually measure how much further it extended, and they use that number as a representation of the strength of the market.
Okay.
So what we're expecting now is for price to come down below the FLD to form this trough. But an interesting thing is happening in the TASI, because this trough is expected now. I mean, it has to happen soon. So when a trough is expected really soon and price is still above the FLD, we need to watch this line, because it's possible that price won't be able to get below it. If price does get below it, we will calculate a target, and then that would be when we would wait for price to reach the target and then enter into a long trade. But because the trough is due soon, it must happen within the next week or so. Because it's due soon, it's quite possible that price will fail to get through the FLD. The FLD is a very powerful line, and if price finds support here, then we would again have a long trading opportunity because we're interested in price bouncing out of this 80-day cycle trough. So that's a basic explanation of how we use Hurst cycles. Here is trading view.
So we have an interesting week for TASI.
Yes, it's going to be a very important week, and I shouldn't have done that. There we go. It's going to be a really important week for the TASI. So here we can see exactly the same thing as I've just been showing you. This is on the TradingView platform. Here you can see that we have the TASI, the Tadawul All Shares Index. This is a daily chart.
You are making our lives easier, David.
Yes. And you can see the same cycle analysis has been performed. Here we have a 20-week cycle trough that has been found on the same date here at the end of November. Everything is color-coded and is explained in this table. I won't bore you with all the details, but here you can see the blue color stands for the 20-week cycle. This orange stack of diamonds here, the longest, the diamond on top is the longest cycle, and you can see that's the 40-day cycle trough. And here you can see the nest of lows presented at the foot of the chart. It stretches forward until about, what's that? That's about the middle of next week, I suppose. And so, and here you can see the FLDs. I was showing you the 20-day cycle FLD on Sentient Trader a moment ago, and here it is again, the 20-day cycle on TradingView. We've also got some other FLDs because on each chart we can watch 3 FLDs to understand what we're expecting to happen, but we don't need to worry about those for now. The important thing is what's expected to happen here. As you can see, these downward pointing red triangles, that tells us that we are expecting price to come down below this FLD. If it does, it will generate a target. And here are the targets that are calculated for you on this chart. Notice how on this 80-day cycle target, that proved to be the high price. Just for a few days, price came down into this little trough over here, then it came up again, then it reached the 40-day cycle target, and so forth. We can change the settings on this chart. Let me quickly do that to display. We can show longer time frame targets as well. So let's just do that quickly.
So for FLD, you go 1 degree down, like for the 40-day, you use FLD, the 20 FLD?
So the relationship between the cycle that you're trading and the FLD that you're trading works like that. Yes, if you want to be trading the 40-day cycle, you would be looking at the 20-day FLD. Is that what you're asking?
Yes.
Yeah.
So use it.
You will notice here we have a 40-week cycle that comes from the weekly chart, which is up here at a level of 12,732. So that's definitely a target to be looking at, because again, we are expecting this 80-day cycle trough. Okay, so if we focus on what we're expecting to happen right now, and let me just extend the chart like that. There we go. What we're expecting to happen now is told to us by the cycle analysis. We look at the foot of the chart and we can see we're looking for an 80-day cycle trough to happen perhaps early next week, or it could even happen. It could have happened today. We don't know. Sometimes you do get very subtle troughs. You can hardly see them. It's possible that's all that we get out of the move. But we are expecting price to cross down below this FLD. You can see here. So we need to watch this level very, very carefully. If price crosses down below the FLD, it will generate a target. So then we will have a target down here. When it reaches that target, we would definitely be expecting price to turn around and pull up out of the 80-day cycle trough and start generating targets to the upside. So that's what we're looking at in the Tadawul. I can show you. Should we look at a few other charts? Let me know if you've got questions or there's anything that you we touched earlier on trading shorter time frame charts. So here is this is Bitcoin, where you can see here. I think it's a 1 hour chart of Bitcoin, and here again we've got our cycle analysis. Excuse me. So here we've got a 20-day cycle trough. That might be a longer cycle trough because the longest cycle on this chart is 20 days. So it could be a much longer trough.
Mhm.
And here you can see that the interactions between price and the FLD have been labeled. That's an important part of it, which I haven't really had time to talk about.
In your video.
On TradingView is identifying all of these interactions and it's labeling them. And so here we had what's called an E category interaction. And notice all the green arrows over here on our FLDs. It's a bit of a messy chart at the moment, but we are expecting the FLDs to provide support. Those green arrows mean the FLD are providing. They provide a sort of a dynamic level of support. So we're expecting support, and we've got some good targets up here. You can see a 1-day cycle target sitting up here at 105,000, and we've got 2-day and 5-day targets all the way up there at 108,000. So again, we're seeing the clear M shapes playing out. And so what we're looking at now is for price to move up like that. And if we zoom in.
The indicator is available right now on TradingView.
Yes, absolutely. It's available on TradingView. I can provide you a link. I should have thought of giving it to you before we started.
I will repost it. Don't worry about it.
Okay. Yeah. So if you repost, yes, it's available for TradingView. There's a 14-day trial. Because there's quite a lot to learn, you have to understand what all this means. So there's a tutorial course that we made that consists of, it's about 8 hours of tutorials. So the trial, it's a free trial of the indicator, and it comes with a tutorial course which explains how it works. So yes, it's available. We're really excited about this TradingView indicator because it makes everything so much easier. From 20 years ago, when I was doing things with pencil on a piece of paper, to now, getting everything in TradingView. And let's go all the way down to a 5-minute chart on Bitcoin.
Oh, really?
And
you go 5 minutes?
It's a bit.
You go to 5 minutes?
Yeah. So here we are on our.
So even
here's
for
our
traders,
5-minute chart. We'll look at
they can use.
Yes, absolutely. Here's our 5-minute chart. So you can see that the indicator has found a 12-hour cycle trough over here. Interesting, it didn't find it here, but it's a detail we'll leave for another time. Here you can see prices heading up towards a 100-minute cycle target. We've got a 6-hour target over here. Our FLDs are providing support. So we have all the information, here on a 5-minute chart. We can, if you're really brave, you can trade your cycles on a 1-minute chart.
That's tough.
We'll wait for it to update. There we go. So here we go. You see, here's our 100-minute cycle target. notice how these targets, even on this short 1 minute chart, notice how when a target is reached, here's our 25-minute target. That's a good example of how these targets are generated. Here we've got a trough. Here we've got price crossing, and this is a 1 minute chart. So then we measure the distance, or the indicator measures the distance from there to the cross, generates a target. And look at how when the target is reached, often the cycle move is exhausted. So, here the 25-minute target was reached, price was exhausted, it came back down again. Look at how it found support, even on the 1 minute chart at the FLD. And it found support again at the FLD. Then it reached the 50-minute target. After reaching the 50-minute target, it comes back down again. Finds support again. The 1 minute charts are very a little bit messy because they're a bit noisy. You get a lot more influences, not just the cycles, but you also get all kinds of other things happening at the 1 minute level, of course. And you can see we've got a 100-minute target up here that we're hoping to achieve. We've got various other targets. Price is making an effort to get there. So there we go.
I'm looking forward to use this indicator, David, to make more easier.
It makes everything so much easier. Yes, that's right. Yeah, you have to understand. You have to understand how it works, particularly when you're looking at the 1 minute chart. It can get very, very messy on the shorter time frame charts. You need to understand how it works. As price is coming down here now, you can see we're looking for a downward move through the FLD. So it looks as if that's failed to reach those targets. When it fails to reach a target, that's quite important information. There's still a lot that you have to do as the trader, but the indicator provides you with very useful tools. And the indicator works very well with other tools. Perhaps you're using RSI indicators or stochastics indicators or a MACD indicator. When you have the cycle information, you'll find that the cycle information provides you with an extra layer of really useful information, particularly in terms of timing, because it combines the idea of price in terms of targets and so forth with the idea of time. When are you expecting a trough to occur? Because price needs to move down into the trough, and then it should bounce out of that trough. So it works very well. It plays very nicely with other indicators on the charts. Of course, I'm only showing you the FLD indicator here.
So what is the longer term cycle for Bitcoin?
Right. So the longer term cycle, let's just go up and let's just look at a daily chart. So the longer term cycle, according to this analysis, and it does match the analysis that I've been looking at in Sentient Trader. I could open a chart in Sentient Trader, but I'm afraid it'll take a bit of time. So I'll just speak about it here on TradingView. The longer term outlook is that we had an important trough, a 40-week cycle trough that occurred earlier in January. I post videos on YouTube, which I know you're aware of, that and I look at Bitcoin every couple of weeks, and so it's a fairly good long-term trough formed over here at the beginning of January. There was an 18-month cycle trough sometime in 2024. And in fact, I wonder if we can. No, we won't find it on this chart because it's not even long enough. We could even take a very long-term view and try taking a look at a weekly chart and see what that does. Here we go. So in August of 2024, August of last year.
Yes.
Is it August of last year? Yes, August of last year. We've got, according to this analysis, a 3-year cycle trough. We don't really have time to talk about the 3-year cycle, which is a cycle that didn't exist in Hurst's world, but it's a cycle that we created for the TradingView indicator. But in terms of my thinking, this is definitely an 18-month cycle trough that happened in August of last year. So if you have an 18-month cycle trough, then then long term we're still quite bullish. We're still quite bullish until until price must come down into this 40-week cycle trough over here in May of this year. So we're going to get an M shape. Oops, let me just clear this. So we should get roughly an M shape, which looks something like that, and then moving down. So as you can see, we're at this point in the M shape. We're still looking for price to move upwards, but we're going to be watching soon for a peak to form in Bitcoin, and then we're looking for it to move down into this 40-week cycle trough. Here's the nest of lows you can see. Yes. They look a bit different in TradingView, but that's the longer term expectation. If you have a look at the 80-day cycle FLD, the purple line here, notice how it provided really accurate support to price during this time over here. So we were expecting this cycle trough. It's still a nest of lows for the 20-week cycle trough. So we were expecting it at this time, but a bit as I was demonstrating with the TASI, when you're expecting a trough and price comes to an FLD, you must bear in mind that FLD is a powerful line and it might be providing support, which it did over here. So that 80-day cycle FLD provided really very useful information for us to consider as we were expecting to come into form this 20-week cycle trough.
That's great. I know, David, your time is limited right now. 4,200 are watching your analysis.
Gosh, unbelievable. Thank you so much, Abdullah, for arranging it.
It's an honor to have you. And for TASI, the longer term cycle, we finished the 18 years.
The 18 years. So that's a great question. Let me just. I'm going to go back to Sentient Trader for the really longer term cycle. The TASI, what I didn't mention, and let me just go.
Because the market is growing, the economy is growing. They have a great plan and vision for 2030.
Yes, that's right.
So the market is growing.
Yeah. So the longer term cycles, the difficulty with the longer term cycles is that when we're looking back 20 years, so many other influences come into play. For instance, the currency issues affect stock markets tremendously. So a stock market will appear to have moved tremendously, but it might simply have been a fluctuation of the currency with regard to other world currencies. So you need to take it with a pinch of salt. I don't know if that expression means anything. Okay. So and the problem with the TASI is this tremendous growth that happened over here in the early 2000s. So that was actually something that Hurst described as a pseudo trend, where the cycles get distorted by what's happening in the world, or in this particular case in the country at the time, and so the cycles are still valid, but their amplitude gets tremendously distorted, and we can. I won't spend too long. I must wrap up, but we can have a look at the amplitude by taking a look at the cycle lines.
So it's better to go with the 9 year cycles.
Yes, with the 9-year cycle or with the 54-month cycle, we can look at the amplitude of that 9-year cycle. So this line represents the amplitude. So what's been happening is that we had a tremendous amplitude over here, right, with this very strong move, but it was a slightly artificial amplitude, and that amplitude is now diminishing. It's getting smaller and smaller. And so the point I'm trying to make is that this tremendous move over here makes the much longer cycles quite difficult to identify because the amplitude was greatly distorted. But the simple answer to your question is that it is most likely a fact that the 18-year cycle trough formed either here or here. Okay, which means that the next 9-year cycle trough either formed here or here, and either way, the TASI is going to be very bullish for some time, because if this is the 9-year cycle trough, which is what I think it is, then you are going to expect a good bullish move out of that 9-year cycle trough. If, on the other hand, this is the 9-year cycle trough, then it's not all bad, because we're going to expect an M shape here for the move out of here. That was your central trough, and now you're still expecting the next move out before it comes down like that. So I hope that answers your
that's
question.
great. That's
Okay.
in line with my analysis.
Okay, good.
I analyze using Wyckoff. So
yes,
that's good
yes,
news.
yes.
So if you allow me to ask you a couple of questions.
Yes.
So if someone want to start with the pinning the cycle, where to start? Is it hard for them? Because many asking like, how can I start?
So what we recommend at the moment, getting started has always been something that's quite difficult, because learning Hurst cycles is there's quite a lot to learn, and then learning to use our software Sentient Trader, there's quite a lot to learn. So what we recommend now is start with TradingView, because TradingView is a fantastic platform. You can use it for free, and start with TradingView and start. We recommend getting started with this indicator, because, as I've just mentioned, the indicator does all of that complicated work. This indicator uses only one of the cycle tools, which is, in my opinion, the most important cycle tool, the FLD, or future line of demarcation. But there are other tools. But as a way of getting started, this TradingView indicator lets you get started. There's a tutorial course which will teach you everything you need to do to get started. It is an 8-hour long course. There are 8 hours of videos. So there is still a lot to learn. You're not going to, we think you can get started within an hour or two of learning how to do it, and then fill in the other information. One of the problems with Hurst cycles is it can look overwhelming, but it's not. Once you understand the basics, and you've got started just with the basics that you're seeing on your chart here, and you're starting to trade with it, you will start to see more and more, understand more and more things about it, and then you can expand your knowledge by doing other courses. We've got other courses that we're busy with now, quite advanced courses. How to?
I'm still waiting for that course.
I know.
In 1 year now.
I know. We've been working on it for a very long time. Yes, so that's what I recommend to get started.
No, thank you.
Because it enables you to just sorry, my phone rang. I was on silent, but for some reason it broke through. I don't know. Sorry about that.
And the second question is about the translation of the troughs.
Yes.
Tension and contraction of the trough. Do you have an average of this translation for like the cycles? Let's say the 54.
No, we don't. You mean over all time? We don't have an average over all time, but we do have. Let me show you how the indicator deals with it. Here we have a table displaying the cycles. So, for instance, over here, this column here stands for nominal. So this is the average length of the cycle. So in the trading view indicator, the longest cycle we're looking at is the 40-week cycle. And the average number of bars for the 40-week cycle is 196, because TradingView doesn't include weekends. So it's 196 bars. That's the average length. Then this next column is the what we call the current wavelength, which might answer the question that you're asking. You can see that current number of bars is 218. And then in this column, we can see the variation. So on this chart that has been analyzed, and I'm not sure whether the question you're asking was for all stock markets and all time, which we haven't done, but for this particular market, you can see that all of the cycles have been running slightly long, 11% down to, at the 20-day level, 16.7%. So Hurst cycles might not be perfectly correct for the TASI index, might not be absolutely accurate. But because of the principle of variation, it could be that the cycles run slightly longer over all time for the TASI. What you'll probably find, though, is there are periods of time where you get the market will be 11% long, and then there'll be periods of time where it'll be minus 15%. In other words, they'll run shorter. Generally, in a bullish market, as a matter of interest, you expect the cycles to be shorter. So it's interesting that these cycles have been found to be slightly longer in the Tadawul, even though it has been bullish, clearly, for some time. So I hope that answers your question. And being able to see that the variation of the cycles is 11%, we were looking at this 80-day cycle nest of lows. This nest of lows is based on the average length, but we know that recently it's been 11% long. So in fact, we should probably give it about another 11% in case those cycles keep running long.
That's a great answer. Thank you. Because I had the pleasure to meet Martin Brink a few months ago, and
yes,
and we discussed the cycle. He had an interesting insight that due to the technology and the internet and the frequent trading, the bear market becomes shorter and the cycle is contracting.
Very interesting. Yes.
And it happened. I saw your video about talking the 3-year cycle. The cycle is sometimes getting less, so you adjusted the cycle.
Yes, that's right. Yes, that's a very interesting idea. Yeah.
So do you think the cycle is getting contracted a little bit?
I think they have. When Sentient Trader was first available, one of our very early users of the software was convinced that all the 9-year cycles had become 7.5 years, and so it was interesting, as we saw on Sentient Trader at the beginning of this call. I measured those cycles, what I was calling the 9-year cycle, and they were 7.5 years. So I think there's fairly good evidence that the cycles have been steadily getting shorter and shorter.
And the final question regarding the August trough or July trough for the markets, the S&P, it was the Bitcoin, and mainly the markets on August.
The August trough for August 2025?
2024 it was.
Oh, 2024, yes.
Because we had the trough, I think, on May or July before that.
Okay. Shall we zoom out? Here we go. So there's that trough here. Let's look at sentient trader. That might be a little easier. So right, and let's go to daily. Okay. So the August trough. Yes. So you're asking about this trough here.
Yes, 24 August. Yes.
Okay. So what is the question? Are you asking why it's
The
there
question,
and
the
not
question
over
is
here?
for the markets, David. So this trough for the markets, especially the US market, it's an 18 month cycle.
Yes.
So the August, huh?
Yes.
Oh, okay.
Yes, that's right. Yes. I think it's an 18-month trough that formed then. So an interesting thing happens with Hurst cycles analysis is that you can spend a long time arguing about the magnitude of the trough. And there are other Hurst analysts who say that's not 18 months. It should only be a 40-week cycle trough. So if that is the case, then without getting too complicated about it, what that means is that then you would be looking at that sort of an M shape. Personally, I think that one can waste quite a lot of time worrying about, is it 18 months or is it 40 weeks? What I like to do is I say, what's my level of confidence? And my level of confidence on a trading basis isn't actually 18 months. No, but I am confident that it's 40 week.
Okay.
Okay. So because I'm confident that that's a 40-week cycle trough, I can make trading decisions on the basis of the fact that I know that's definitely a 40-week cycle trough. That means that I'm looking at this here. Here is the 20-week cycle trough. Here we're coming up to the second peak. We're going to form this peak maybe fairly soon. Maybe it's going to go further. And I'm focusing on the next 40-week trough, which is over here in May or June of this year. May is going to be important for stock markets around the world because it's going to be a 40-week cycle trough. So in terms of trading on a daily basis, if you like, not intraday trading, that's okay for me to have that level of confidence. When the peak forms and price starts moving down into this trough, if it moves down only a little bit, then I will say, okay, yes, that probably was the 18-month cycle trough. If it moves down a lot, then I'll say, then I'll say, no, that's not 18 months. This is 18 months. The point is, I'm expecting the market to move down. And
that's the direction.
Yeah, it gives me the direction. If it's a disappointing move down, then okay, then that's the 40-week trough only.
If you can protect the profit and know
that's right. That's right. Yes. Yeah.
David, thank you so much for your time. I know we went beyond the limit for 30 minutes. I understand.
No, it's been a pleasure. Thank you.
Right now, 5,000 are watching you and watching your analysis, and we are appreciative of you, and it's honor to have you with us here.
The honor is all mine, really. Thank you, Abdullah. It's really.
You have a last word to say for the community.
Well, I want to thank you for introducing Hurst cycles, to your side of the world. I really, it's Hurst cycles sound complicated, but they're not. Hurst cycles is really as easy as sort of drawing squiggles on your chart. That's how it started for me. And once you see the Hurst cycles and see the cycles playing out, you can't not see them anymore. And so I hope that for your audience, when you start seeing these cycles, I hope that they change your trading lives the way that they did mine. So thank you so much for hosting this and inviting me.
Thank you, David. As long as you are making our lives easier with these platforms, we will be good. We are in a good hand.
Yes.
Yes. David, thank you so much. And It's an honor to learn from you and to have you here with us. Thank you so much, David.
Thank you. Thank you very much, Abdullah.
Thank you. Thank you. Have a great day.
Thank you. You too. Great evening.
Thank you.